There was a 100% chance that Chair Yellen was going to raise rates. The market knew that she was going to raise rates. The difference was the 2 versus 3 for 2017. So I think people are going to take a step back, which is totally understandable, absorb a little bit, and it'll probably be a light liquidity day, but look first, shoot second.
Heather, you got a new name, a new do. You got a new lease on life here. What do you think about what's happening in the market?
But I need a new hat. I was hoping it would be that historic day.
Doesn't seem
maybe
like it
I can come back when we do hit 20,000. But I think the markets are selling off right now because Yellen is not giving them. It's Zumarraga now. Hopefully, they're yelling in the background. I'll have to let them know. But I think the markets are selling off right now because Yellen did not give them the juice that we want to hear in the press conference.
What would she have had to say to move this market higher, do you think?
That we're holding rates lower for longer, even though we increased a quarter and 25 basis points isn't that much. That was warranted and expected, anticipated. I get it. But she also said that we're going to continue quarter-point hikes over the next 2 years until we get to 3%. And markets, there's no more Fed-induced rally. Maybe party's over. Take a pause.
Nancy Tengler, what are you thinking as you watch this market move lower? I mean, you are of the opinion anyway that you want to buy some dips here. You don't want to be chasing this market. Is this the kind of a dip you'd want to get into today?
It's a start, Bill. Thank you. I do think that, Bill Gross coming on and talking down the financials a little kind of started things. And then we had 3 increases in for next year, but the street and the consensus was at 2. So I agree with Heather and Steve. I think it's just the rate hike was baked in, but her comments were not.
Our Steve Liesman was just in that meeting. Of course, he's stepped out of it now to join us with some thoughts and reaction here, Steve.
Yeah, I mean, I think the panelists have it right that the market has a little catch-up to do. I think it's interesting, as Rick Santelli described it earlier, it's a bit of a flattener, ultimately, that the long end did not go up quite as much. I think what the way the market must be taking this, Kelly, is as follows, is if you're planning to do 3 now, and yet saying, as Yellen said repeatedly, is we're not yet factoring in the Trump policy effects. That the concern is that it may be maybe not just more than 3 in 17, but additional rate hikes than are already expected in 2018 and beyond. I think the 2-year perhaps today found itself a little bit more behind the curve. There's the rate forecast, and when you look at that rate forecast, be a little careful at what it shows. It shows you there's a single rate hike in 2017, additional than what had been previously forecast, and that extra rate hike carries through each year beyond, to the point where the long-run rate is just 0.1% higher than had been previously forecast. So it's not really like they've added anything going forward. 2017 gets that extra quarter, and then 2018 and 2019 perhaps is where the risk is for some of the other term structure in the bond market right now.
Rick Santelli, we're trying to figure out the market's message and reaction to all of this today. So far in the fixed income and the currency markets, the trend that's been in place since the election continues. Yields going higher, the dollar ripping again, but it's the equity market that has changed course today. What do you make of what's been going on?
Well, I think that I wouldn't draw huge conclusions regarding the equity hiccup, and maybe it lasts a little bit longer. We did come within 35 points of 20,000. Not a bad clip for a short period of time, but I look at it a little bit different. I think that the Fed is too rigid. Basically, this is what they've been wishing for, and they get the gift and they turn it down. In my opinion, if they would have rubber stamped this with more aggressive comments, either in the statement or the press conference, and Steve had a wonderful question. Other reporters kept drilling the point home about, hey, look what's happened since the election. Janet Yellen almost seemed oblivious that anything has occurred at all. I think that the confidence of this move, will be borne out by legislation. But I think a little bit of a rubber stamp would have gone a long way.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.